man, for me, it was always like, okay, fix and flip is cool, owning rental properties is cool, but it seems like there's something bigger that we're not participating in because we can never figure out how to handle this gentrification thing, right? So if we're all in real estate and making all this money, why can't we figure out how to participate in it and control it? It's not about really stopping it. Like some people have the mentality of leave those neighborhoods alone. Everything has a life cycle, like everything has a life cycle, including the neighborhood. So you got to bring it back to life. Um, and for me, man, what I focused on first, even before this Buy the Block project, was how do we get the high incomes back to the neighborhood? Because we can beg and protest and talk to the city council and the mayor about bringing grocery stores and restaurants back to these neighborhoods. Those are businesses that need revenue to stay afloat. So, if we're leaving the low income people over there and we're focused only on low income housing and we're not bringing any high incomes back to those neighborhoods, those businesses will never set up shop there again. That's no man's land for them. So for me, first it was okay. Let's build. Let me build some market rate stuff that's attractive in a neighborhood that's going to be gentrified anyway. So the property values are going to go up. And let me start educating my people on why it's important to buy these houses right now before all that happens. And so
Look,
that's what I've been.
before hold on, Chris. Let me stop you
Yeah.
right there. Before you move forward.
Uh-huh.
So you went into a neighborhood that had no values
Mm-hmm.
and you created values. So you
Mm-hmm.
took a huge risk on creating
Mm-hmm.
values. But I
Mm-hmm.
got a question though. Who
Mm-hmm.
gave you the money?
Well, the 24th lender gave me the money. The other 23 told me hell no. So it took me.
Okay.
Yeah,
24
literally.
lenders.
Literally.
Okay.
So what I finally found a lender that was like willing to pull from other areas that were within like a 4 or 5 mile radius of the project, and they were like, "We see what you're doing." And those other houses were deeper in neighborhood, no downtown views, no anything. So they were like, "Okay, we see what you're doing. It's close enough to the freeway to where if a buyer really wants to be close to downtown and they don't want to spend 400,000, you're saying you're going to sell these for 275. Somebody's going to bite on that." Right. And so they gave me the money to build the first three. All I needed was three to be able to set the comps. You need three good comparable sales
Yes.
to set it to move everything forward. So that's what I did. Built those first three, and I spent that whole time like just really just pushing the message on social media and make sure everybody on my team looked like me. So I had the black brokers talking to the other black agents that had buyers that were looking in the area, the black mortgage lenders talking to the black real estate agents that had black people that were approved. So just making sure that everybody knew, hey, this is where we need to be. This is the last historically black neighborhood in Houston that has not been gentrified and taken over by somebody else right now. This is our opportunity to control what's going on. So that worked. So I'm building the second phase of those right now. It's a total of 14 townhomes. I got three done, also to young black working professionals. I'm building two more right now, but I got contracts on four. So I got the two I'm building already sold, and I got two I haven't even started on that already sold, but it's a total of 14. So um, yeah, man. So it's working, and it's sparked other revitalization too, because it's not just me now. Other investors that were mainly fix and flip have seen me do new construction, and now they're over there either doing rehabs or doing some new construction too, because I feel like that's we for some reason a lot of us stop at fix and flip, and there's so much more to it. You want to get into new construction, and then you want to get into full-fledged development, and then you want to eventually go to commercial development, which is my next level. So we gotta keep that trail going to keep holding hands and pulling each other up as we go. Um, so on the other side of that though, in these same neighborhoods, the people that we want to look out for are the long-term residents, right? And so when you think about the best way to have a big impact and protect a lot of the long-term residents at once, that process requires us to look for the biggest opportunity to control more than one rooftop and more than one door at a time. So the best way to do that is to find landlords, old landlords that are ready to retire, old landlords that thought they were building generational wealth, but the kids decided, nah, I don't want to own no properties. I watched you deal with all that headache. I don't want that. Dad, go ahead and sell it. And so when they sell it, usually what happens is the people that buy it don't look like us, especially if the neighborhood is gentrifying, because those developers are going to buy it. And those developers, the first thing they're going to do is evict everybody, kick everybody out, or double the rents or do something like that. Even some of us, unfortunately, because that's what we're taught to do, buy a house. If the rent's below market, immediately raise the rent. get your maximum dollar, but you don't realize how heavily that displaces the people in the community, right?
Mm.
So for what what I was able to do with this one is I was able to talk to the sellers, and there's 18 houses, all contiguous in one little community. It was owned by, originally built by a Jewish doctor who bought this land after desegregation, when all the black people decided we were too good to still live in our black neighborhoods, since we could afford to go, since we now had the right to go live in the white neighborhoods, we're gonna leave our community and go live over there and stop paying taxes on grandma's house because grandma's house is raggedy or whatever. And so we lost a lot during that time. So that's the part we don't talk about. We talk about redlining, but we don't talk about the other side, about when we did buy houses in other neighborhoods, we left our neighborhoods to dry. And the people that are smart, that mostly, man, right now, I think it's like 60 something percent of the rental property in Fifth Ward is owned by Jews and Italians. And most of them, they didn't steal it. Most of them, they bought it after it became abandoned, you know?
Yeah.
So, but now it's a movement for us to come back and start buying this stuff back. So, long story short, the couple I bought the property from, they are an older black couple. They bought it, or their mom bought it. The wife's mom bought it in like the late 70s from the doctor. So 2 generations of them having it, but the kids were like, "Nah, we don't want to deal with it." So they were listing it for sale, and all the tenants were scared, because some of the tenants been there literally 19, 20 years. I'm gonna do a video next week with some of them, just talking to them. It's 2 sisters that live next door to each other that literally been living there for 19 years. Crazy. So what I was able to talk to them about is, like, they wanted like $1.5 million for this whole portfolio. It's 18 houses and it's commercial buildings on the main strip that used to be the black business district. So this was like the Black Wall Street, mini Black Wall Street of Fifth Ward, where all the lawyers, doctors, the grocery stores, the insurance companies, all the agents, the retail stores were all on this street called Lyons Avenue in Fifth Ward. So I have 2 buildings on that street too. One is a restaurant. So what I'm able to do, since these tenants are so stable and have been there so long, and it's bringing in like $12,000 a month as is without me touching anything, I'm like, okay, cool. I can go in and take this $12,000 a month in revenue and not have to raise anybody's rents, because that's practical. That's a good return on the price I'm paying for the property. So the purchase prices, it went from 1.5, I talked them down to 1.25 million for 18 houses and these commercial buildings. And I also talked them into seller finance. So I negotiated to bring on 50% at closing. So $600,000 to close it. And then they're going to carry a note and seller finance the other $650 for me for 2 years. The killer part is I don't make a payment for 2 years. In 2 years, I pay them off, right? And part of the reason for that is because they didn't have accounting records. They were picking up money orders and all this kind of stuff. And even if I wanted to go to a bank to get funding for it, there was no profit and loss sheets. There was none of that. There was no CPA certified documents. So I told them, I need 2 years to establish these financials to be able to go ahead and refinance you out. And I told them I'm also planning to crowdfund this, because I feel like this is a great opportunity for me to bring other people in and let them invest, because when we close from day one, it's profitable. It's not like a hedge fund model where I was talking to Jay Morrison. I interviewed him a couple of days ago, and we were talking about the differences in our approaches. And at the end, he was kind of like, "Yeah, yours was kind of smarter. Taking a project-based approach instead of just raising a whole bunch of money and then trying to figure out what to do with it, and then
I'm gonna leave that alone, Chris.
Yeah, and promising people a big rate of return. No, but I mean, it's not anything negative. It's just like a learning lesson, right? Yes, I mean, and he was open and honest about it. He was like, it's a challenge now, because you got everybody waiting for their money. And for me, I told him, I was like, I don't want to take that big of a risk. Like, I knew about crowdfunding, but I had to find the right project. I needed something that was cash flowing from day one, so that when people invest, I know that their rate of return is going to be there already built into the project pro forma, And so, yeah, so everything kind of fell together. So now I'm able to take this $12,000 a month. First,
what is that? 144,000 a year.
144,000 a year. So even at a 10% cap rate, that's worth 1.5 million, and I paid 1.25 for it, and that's not including the commercial, because half of the commercial is vacant. So I'm gonna take the revenue from the rent. I've already fixed up the houses. If you go to my Instagram, you can see those pictures now.
I saw it. Yeah.
I went in did landscaping, redid the roofs, redid plumbing, redecked floors where they have bad rotten wood, painted everything. So it gave it a fresh new look. And now I'm about to take this next couple of months of rent and the rest of the money from the crowdfunding. I'm going to invest in the commercial to bring in more commercial tenants, so that we're going to create more businesses, more. We're going to facilitate more entrepreneurs in the community and create more jobs and raise the revenue, which also raises the value of the property, right? So that's the project in a nutshell. And so, so the way I decided to structure the crowdfund was to take 40% of the ownership of the entire project and break it up into shares, $50 shares, and then allow people to invest as little as $250. So you got to buy at least 5 shares, and then you have ownership in this alongside me. So your ownership is going to distribute you 40% of the net rent. So after everything's done at the end of the year, all the bills are paid, taxes, insurance, everything, I'm going to take 40% of what's left, that's the profit, divide it up amongst all the shareholders and send it out to all the shareholders. So it's just like getting dividends, right? Dividends from a stock. And then on top of that, what I'm doing also is, you're inherently going to get share value increase, because this property, I didn't mention this part, is like less than 3/4 of a mile from a 150-acre mixed-use development that's coming to Houston. And when I say mixed use, I'm saying like high end, like right next to the Rockets Arena, right next to the Astros Stadium, hotels, office buildings, condos, high end apartment complexes, restaurants. All this is within 3/4 of a mile away. And that's why I'm saying this neighborhood is really gentrifying. So it's really going to be hot. So if I didn't do anything, even if I didn't fix up the commercial, I just kept this $12,000 a month in cash flow from the rent side and let the value appreciate on its own, everyone will still get a great return. Because, I mean, the land value is going to double, triple easily in the neighborhood. I mean,
a favor. It's a lot of questions, and I know your website has a lot of the answers. Can you, I think they say pin it, put your Instagram name up, and then your web page, how they can go on and just read it? Because a lot of the questions I know, because I've read them. So a lot of the questions are on there.
Okay, yeah. So buytheblock.com, guys. It's real easy. Real easy. You can go. Dang, Auntie Pam. I see you, Auntie Pam. Yeah. Buytheblock.com, guys, and go in there and look for Buying the Block in Historic Fifth Ward is the name of my project. You can go there. Or you see my Instagram at the top, _investor. You can go there, and my little story highlights at the top. I have one about the project. It says invest. And there's a long Q&A on there, like an hour-long Q&A where I answer a bunch of questions and talk about the project as well. So.
Good deal, man. Listen, I ain't gonna keep you long. We having a party tonight, man. So we're gonna rock and roll. I appreciate you being on here, man. I want people to understand that there's a ton of opportunities that doesn't have to be in your own backyard. Like we were saying, it may be passive, but we also have some really good resources in Houston. If I just wanted to come and do a fix and flip, if I wanted to move there, if I wanted to buy and hold, we have resources, and that's one of the biggest things I want people to get out of that fear. If I'm living somewhere, I got to. If the deal is not there, if the deal is in Houston, why not?
Right.
Let's go to Houston.
Leverage. Yeah. Use other people's time, effort, and energy, and their knowledge of the local market, and make money.
So look, again, I appreciate you, man. If anybody have any questions, go follow Chris. Read the website before you send them questions, because most of the answers are on there. And let's put some money over there, y'all.
There we go. I appreciate you, man.